Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody is doing well. And today's markets, guys, not much action. Very muted price action, as a matter of fact, leading into Judgment Day tomorrow, guys. A very big day for the markets tomorrow. CPI first thing in the morning. And that is going to be the biggest day for all of the month of April. We don't have any Federal Reserve meetings until the month of May, and this data set is going to be crucial in determining whether or not the Fed will be able to cut in June or July, or maybe we'll have to postpone that all the way into the fall. Extremely important day of data tomorrow. So in today's video, guys, we're going to go over the CPI preview for tomorrow and what we can potentially expect. And we're also going to go over our major technical analysis in terms of indexes and big tech names and wrap it out with some of the swing trades that I've been considering positioning myself in tomorrow after the data release. So without further ado, guys, let's get right into today's video. So SPY up 0.12%, QQQ up 0.37%. Very muted action. Traders largely just waiting on the sidelines to place their large bets until after the CPI release tomorrow. In terms of the heat map, guys, well, today, fairly mixed market as a whole. You had some decent performance in healthcare, financials down, and big tech largely holding their own. No real outsized gains for the day. Semiconductors largely kind of flat. NVIDIA, the market leader of semiconductors, was down, but for the most part, the rest of the index was not doing too bad. And the bottom half of the market as well, fairly broad market rotation. Really just a case of the jitters prior to tomorrow's data release. Now, moving into the one-day relative performance, you can see that even better here, guys. A lot of sectors did have some decent gains in terms of the day, but the only ones to the downside, guys, industrials and financials. But for the large part, guys, not a very red day as a whole. So the markets today largely healthy. However, all that could go out the window depending on the result of tomorrow's data. So let's get right into the preview for tomorrow, guys. And we're going to start it off with a bit of context of what we've been expecting, right? So we obviously know that we've been on a 4 or 5 month absolute rocket ship of a market, but that all started coming undone when we had the inflation report in the month of March. So January, we got a hotter than expected inflation report. The markets kind of discounted it as a one-time thing. But when the March CPI data came out, which was for the month of February, it showed for the second month in a row that data was coming in hotter than expected. And that was right about here, Wednesday the 13th. And you can see ever since then, the markets have had a real difficult time picking a direction. Now, following that week, on Wednesday the 20th, Jerome Powell came out and gave us the green light. He said, you know what, guys, January and February, as per our analysis, did not change the overall trend of inflation. Inflation is still coming down, although it's stickier than expected. Jerome Powell basically green-lighted the markets in saying that the January and February numbers were not that important. However, now we come up to month number 3. And why this is important, guys, we've been relatively sticky here, right, for the past couple of months in terms of inflation. So what are we expecting for tomorrow? The expectation for tomorrow is 3.4% year over year inflation. That is higher than the February number, but it is not exceptionally high, guys. That would only put us as high as pretty much the month of December, as you can see on screen right now. Anything between 3.4% is pretty much in line with the last 4 or 5 months of data. That is why it's so crucial to determine what's going to happen tomorrow, guys. Is Jerome Powell going to potentially reverse his stance that he took here? If we get one more bad month of CPI data, can he potentially change his tone in the May meeting? And that is what the markets have been waiting for all this time, guys. The markets had a green light to go up, up, up. Inflation was coming down over the past couple of months and everything was fine. But as soon as we got those 2 hotter than expected inflation reports in a row, you can see the market is hesitating. The market is nervous because there's a lot of uncertainty on the table, guys. Is inflation coming back? Or is it not? That is the key factor. So let's take a look at last month's inflation data and see what caused most of the move up. So here was your February data. Just to recap, CPI for all items rose 0.4 in February. Gasoline and shelter were your major contributors. Now take a look here, guys. Goods inflation has never been a problem in the past 4 or 5 months. The sticky events have been your services. Take a look at shelter here. Shelter here, this purple line, is well above our all items line, isn't it? So shelter in purple is a problem. And the yellow line, services less energy services, is also a problem. These two things representing both the services category. Goods, for the large part, have been down, guys. We pull up this chart last month as well. When we went over this, you can see here, goods are not a problem. As you can see, there's very few items that are currently above our overall inflation reading. Most of those are services, auto insurance, rent, housing, right? But there's a lot of goods categories that are now netly below our overall inflation target. You can think of education, right? Well, that might be a service. Alcohol, pets and pet products, right? College tuition, groceries, new vehicles, clothing, and the list just goes on. Hotel rooms, electronic, used vehicles, furniture, right? All of that is below our overall inflation. So the problem is not in goods. It really remains in services at this point. So let's take a look, guys. What has happened over the month of March in our services, more specifically the ones that we were worried about, namely oil and second, housing. So let's take a look at oil. What has oil done over the month of March, which would be an indicator for the prices of gasoline, right? Well, you can see that since the beginning of the month of March, guys, oil, unfortunately for us, those of us that want negative inflation data, right? Well, oil is up about 8% over the month of March, so that most likely will be a contributor to sticky inflation tomorrow. The other one is rent prices. Let's take a look at rent prices here, guys, right? So rents across the US grew for the first time in 6 months. Only Arizona saw price drops in every metro. This is a headline that came out about last week here at the end of the month of March. So you can see rents actually grew over the month of March. So could inflation be sticky? Very potentially in shelter and energy once again. Take a look at your top rental markets as analyzed by Zillow as well. You can see that in the past 2-3 months, guys, except for a few markets here, there's a lot of them that have been relatively sticky. They are on a slight little uptick. Take a look at Phoenix, Dallas, Orlando, Miami with a slight little uptick, right? Chicago as well, Houston coming up, New York coming up, Atlanta coming up as well. So overall, this is still in the context of downtrends in most of your markets, except for Chicago, over a 12-month rolling basis. However, we need to keep an eye on the March data. March data for services, housing, and energy could come in a little bit hot. That needs to be counterbalanced by drops in other services and drops in good as well to keep the data pretty much in line with our expectation of 3.4%, or the markets, guys, are really not going to like it. And we'll keep an eye on this. Why is it so important? We remember our bear thesis. The markets are looking right now for a reason to either rise or start your technical sell-off. The technical sell-off, guys, can be started if we do have negative inflation data tomorrow. That will bring back this point right here of the fears that inflation is now on a little bit of an uptrend. Take a look, guys. These are all of your inflation metrics. CPI in green, core CPI in blue, PCE, the Fed's preferred gauge, in red, and the core PCE. You can see that they've all roughly been kind of flat and slightly upticking. Well, if tomorrow comes in hotter than expected, this will make that chart point upwards. And the last time that this happened, guys, was last fall. And what happened last fall when we got some resurgence in fears that inflation will uptrend once again, potentially because of seasonality factors. And then what happened? Big sell-off, because when inflation started to uptrend, Jerome Powell came out and said, listen, guys, it's going to be higher for longer, and we mean it this time. So could this be another case, guys, where if inflation comes in hot tomorrow and then kind of sends the markets into a little bit of turmoil for the month of April, and then we get Jerome Powell in the month of May saying, listen, we thought the data from January and February was not a problem, but now with March also coming in hotter than expected, we really need to maintain higher for longer. And this time we mean it again. Rate cuts pushed back, potentially to the fall. That is not going to be good for your market. So that's why tomorrow's report is extremely crucial. 2 months so far, the Fed's been able to say, you know what? Not that much of a problem. Inflation is still overall in a downtrend. But 3 months is going to be tough for them to ignore. So that's what we're looking at tomorrow, guys. The markets need a reason to continue their march forward, and that will only happen if tomorrow's read comes down and the markets will feel a bit safer. But inflation upticks tomorrow, comes in hotter than expected. It gives the markets a reason for a little bit of a technical sell-off, right? So keep all of that in mind tomorrow. That's why tomorrow is so crucial. So now with that out of the way, guys, let's get right into our technical analysis with our major indexes. And we'll start it off with SPY. We're going to go through these quickly because not much has changed as well. So SPY, still in the context of this daily downtrend right here. The bulls putting in a nice bounce, getting back above our trend line, getting back above our moving averages, and we are well above our last area of support. Tomorrow, I would keep a crucial eye if inflation is negative, guys. For the rest of the week, do we come down and break 512 down to 505? It's our last line of defense, guys, because that is your weekly higher lows. Extremely important to protect this level right here, because if we lose that, we lose the weekly uptrend. It would not be a weekly downtrend until we get lower high, lower low, but a loss of the weekly uptrend this week with negative CPI data could start a potential negative sell-off here. And the only thing that's going to save us before Jerome Powell's meeting in May could be big tech earnings that are coming up on the end of the month of April. So keep that in mind. So far, the bulls doing nicely with this bounce attempt right here. They've created enough space to make the higher low as they have today. Just remains to be seen. Can we get a daily uptrend going back after tomorrow's inflation data? Or in the worst case scenario, guys, if it's negative, how far down do we come over the course of the week? And do we flush these 505 weekly higher lows? Extremely, extremely important. So far, the bulls not looking bad, but tomorrow could all change that. Now, moving on to QQQ. QQQ, same pattern as SPY, right? So QQQ as well has been caught in a little bit of a daily downtrend now. We've made a nice little bounce attempt. We're back above our two short-term moving averages. We're still below the trend line. That below the trend line is not that big of a deal, guys, right? We're kind of just moving sideways. So it's a very nice sideways tight range right here. And I've said before in the past, you don't need to maintain a trend line for years and years. You can actually have a nice trend going, break it sideways, and then set another trend, break it sideways, set another parallel trend, right? So they don't always have to go up. So that's why I say sideways consolidation is not that bad as long as we don't get some big negative macro data tomorrow from CPI, which could induce a little bit of fear in our markets, right? So we're going to keep a close eye on this area right here, this green box. Our last level, guys, 435 down to 430. Keep a close eye on how we react to this zone tomorrow. If it's negative, and if we close under there under the week, we would then be losing the weekly higher lows pretty much, right? Higher low, now tightening range. If we lose this box right here, we would be plunged into a weekly downtrend on QQQ. That would be notable to us. The only other sector that's done that so far is healthcare. SPY, not yet close to losing. They would actually have to two-step this, right? We would lose and then reset. QQQ is already ahead of the pattern. Double top. If we lose these lows right down here, 432, it would technically be a weekly downtrend if we close below there. So crucial for the bulls to protect this. And obviously to the upside tomorrow, guys, if we have a very nice day, well, we'll probably be recapturing the higher end of last Thursday's move, 447, which would put the bulls back in the driver's seat and try to get back in this trend line, set the weekly higher lows here, and try and make another attempt to the upside leading into big tech earnings. So tomorrow is so crucial, guys, for short-term direction and also for weekly levels. Tomorrow is going to set the narrative for the next month leading into the next FOMC meeting with Jerome Powell in the month of May. Now, moving on to financials. Financials not looking too bad today. They did have a hefty sell-off in the morning, but recovering in the day. Financials, once again, kind of caught right now in this daily downswing. Are we going to set the lower high into lower low? That's going to be a question that the bulls or the bears are going to be able to answer tomorrow. As of now, we're still maintaining, right? We're kind of in an in-between zone on financials right now. The bounce so far has been a very healthy bounce. The bulls have recaptured roughly, 62% of the move, which does give them the space to reset this into a daily uptrend. But tomorrow's data is going to be crucial. For every which reason, we lose this tomorrow to the downside. Daily downtrend is started. Loss of the 12 EMA will be significant, right? We haven't lost it that much in the past 4 or 5 months of rally, so it would be notable to us. And then if we do start losing those levels, guys, it'll just be on for weekly consolidation. Keep in mind the top end of this range right here, all the way down to about 40.61. That is the area that the bulls should be able to defend right now. Just looking for a weekly higher low if ever that happens. So financials definitely on the watch tomorrow for a potential break to the downside. maybe joining Team Bear in weekly consolidation, as well as with the next index right here, healthcare. So healthcare also has been kind of in a little bit of a rut recently, ever since that news came out last week, pretty much, that there was a big, a big discussion between politicians and between healthcare companies, more specifically insurance providers, as per how much money the government was going to sponsor them with, or subsidize them with, rather. This was the big sell down event. And now that we're in a daily downtrend, we're looking for the daily lower high and potentially lower low flush. We have a lot of resistance above us, guys. The moving averages are above us. The horizontal previous line of support is also above us. So what we would like to see the bulls do is pull right up into this area, maybe get rejected, set the higher low, and reverse into a daily uptrend. That would be best case scenario. If tomorrow's data is negative, well, we may just be retesting these lows, continuation of the daily downtrend, and then continuation of this weekly downtrend as well. Where can it bring us into? This previous area of all-time high resistance, guys. This is going to be 141 down to about 137. Crucial area for the bulls to protect at this point, right? A lot of support down to this area, so we'll see how we react when we get to there. Keep in mind, the MACD on healthcare has crossed. No other indexes have crossed. SPY not looking the strongest, but still hasn't crossed bearish, right? RSI on the SPY is still quite elevated, so keep that in mind. QQQ crossed about 2 weeks ago. This is the second week. Now we have negative momentum in the markets. Does this mean that we're due for an all-time flush? No, it could just move sideways or lightly down, and that would also signify a net drop-off right It may not be as aggressive as last fall, but could still be in for some sideways slash slightly down action. XLV has not crossed, but the RSI is still elevated. So a lot of these things, if they haven't crossed negative momentum to the downside, they are still extended to the RSI on the upside, right? So all these little tiny red flags are really adding to the probability tomorrow, if CPI is negative, that the markets just say, you know what? Enough is enough. We've been patient. We've waited for the data, but now the data is not looking the best. So it might be some time to take some chips off the table. So keep an eye on that for healthcare. Now we've added a new one, semiconductors, because semiconductor is such an integral part of your technology, right? So semiconductors not looking too bad at all. So semiconductors still in the context of this gorgeous weekly uptrend right now, tightening range at the top. This, technically speaking, is a weekly bull flag, right? Tightening range on the daily at the top here. The bulls looking very good. Would not want to lose 212.87. So tomorrow we'll be on watch for semiconductors, whether or not we break down and enter a potentially weekly downtrend. If we lose these lows right here around that 212, 213 area that I was referencing, that would be our first weekly downtrend since last fall. It would be notable to us, and that would signify that monthly consolidation for semiconductors is underway. So far, looking healthy. Tomorrow's data and the rest of the week down to about 213.50 is going to be crucial to watch, because this is one of our lead bull sectors, guys. Take a look at SMH divided by QQQ, right? SMH, this is an expression of how strong semiconductors are versus QQQ. And you can see they are one of the strongest sectors. Literally, this divided by QQQ almost looks like the semiconductor chart as a whole, right? If you take it the opposite side, QQQ divided by SMH, you can see how weak the rest of technology has been compared to semiconductors, right? So semiconductors, if they fall, expect for the rest of the market to get a little bit of fearful. When your lead bull starts taking some big hits, guys, and heads into monthly consolidation, the rest of the market has a choice. They either join your lead bull in the sell-off, or the rest of the market has to make up for it, right? So we're going to be keeping a close eye on what happens with this semiconductor trade. As of now, the bulls not looking too bad, but if we lose that 213, it could get a little bit spicy. Now moving into IWM Russell. IWM Russell not looking too bad on the day, up 0.39%. We're still in this context, guys, of this daily downtrend, right? It's a little bit messy here on the daily, looking for the lower high and lower low. The bulls have put in a decent bounce attempt, but not enough, in my opinion, guys, to set the higher low and move higher in the trend. So on the daily, really messy. That's because we're kind of battling between two zones right now. We're battling between the overhead resistance, which is this previous support line right here at about 210, 211. That's the upside resistance. And to the downside, the battle is this previous area of resistance, which is now support. So we're kind of trapped within this price action, right? Tomorrow, if we get a negative data read, guys, I would not be surprised if you do see the Russell sell off, set lower lows, and come down into this weekly support zone. The weekly higher lows are right here at $200. Keep a close eye at your $200 level for this week. If we lose that, you unfortunately lose this weekly uptrend. You're going to flush the lows right here, and you set the bears up for a lower high, lower low attempt, which would just mean further monthly consolidation on this monthly bull flag right now. The Russell is not looking too bad on your longer time frames, but I could see a situation if CPI is red tomorrow for the month of April and maybe even early May, guys. We may just curl down into this region right here, try and set a monthly higher low down here, and then make an attempt at it later on towards the midpoint of the year, maybe June or July, when we have more clarity on the destination and timing of interest rates. Now, moving on to Dow Jones. Dow Jones, unfortunately, still in the context of this daily downtrend here, guys. The bulls tried to bounce today, triple bottom right now at the lows, but we have a lot of overhead resistance that we're dealing with right now. The moving averages are resistance. They have not been resistance, guys, in the last 4 or 5 months worth of rally. So this is another red flag at a point in the favor of the bears at this point, right? Daily downtrend, overhead resistance on the Dow Jones. Previous resistance was support. It's now resistance again. So the moving averages are resistance. Your horizontal line is resistance as well. And we are in the context of a daily downtrend. If tomorrow's bad, would not be surprised that we flush these levels right here. And at that point, guys, it's getting really dicey on the Dow Jones, because if we lose that, we're in jeopardy of losing the weekly time frame as well. 38,500 is your line in the sand level. Lose that, and unfortunately, you do lose the weekly uptrend. You set the bears up for the lower high, lower low flush on the weekly, which would just mean more monthly consolidation and pulling back down into your previous all-time high area, roughly the 36.7, 36.500 range. Your 12 EMA on the monthly is down there as well. Keep an eye, guys. Your weekly MACD also crossing to the downside. It just goes to show, guys, that a lot of these indexes are getting fairly weak. The markets need direction, and tomorrow will probably provide the direction that the markets need, whether that is to the upside to reverse a lot of the sideways action for the month of March, or to the downside and really send us into that extended consolidation across most of all your indexes. So truly tomorrow is a tipping point for the markets. Now, let's move in to our big tech names now. Now let's move into Apple. So Apple not looking too bad today, up 0.72%, but Apple still kind of weak, guys, right? Even though the bears are having a tough time flushing this area, the bulls aren't really doing any better. They're not able to line up 2-3 days of green in a row and really get out of this 3 weeks worth of downtrend, right? So today, over the course of the day, they're trying to reset the lower time frames, right? We're trying to recapture this hourly time frame right here. We tried into the end of the day. So tomorrow, if the data is positive, we may be able to expect Apple to rise to the upside and really start putting in some of that daily bounce that it desperately needs, getting us as close as possible to 172, engulf the 172, set us up for maybe a daily trend change and start putting in a nice little weekly leg to the upside. Haven't really seen a positive weekly move up on Apple since the month of January at this point. It's been quite some time. If the data is negative, however, keep a very close eye on your last line of defense, which is sitting down here at about 166, right? Lose that, and unfortunately, guys, well, your daily downtrend just gets perpetuated at that point, even lower. Your weekly downtrend, once again, just gets perpetuated to the downside ever so further. And the monthly, we would be in jeopardy of losing the monthly uptrend at the 166. Flush this, guys. We could be losing the monthly uptrend on Apple. Is that much of a big deal in the context of how the markets overall are doing? Not really. We can lose the monthly uptrend. We would not be setting, we would be setting a monthly downtrend, right? But there's no reason that the bulls later on, let's say maybe after earnings or even in the month of May, can't just recuperate this and try to get that back, right? So Apple is not looking terrible. I wouldn't say that there's massive red flags on Apple, but if we do lose this, the next area of support is down here at 155, 150. I'm still bullish on Apple. We will see what the market brings to us tomorrow. Now moving on to AMD. AMD not looking too bad at all. Just kind of flat the last 3 days of trading for AMD after this massive drop last Thursday of 8%, right? So AMD has kind of been stuck in this daily downtrend. The bulls tried to make an attempt here, but got rejected. New daily downtrend. So your daily downtrend simply just continues right now, looking for the lower high and maybe into the lower low, sending us down into the lower end of your last line of defense. This green box here, guys, 164 to 168. previous support here in the month of January and February, and the previous all-time highs. So if the bulls are to put up a fight, I do believe they're going to start putting up a fight in the lower level right here for at least a one-time bounce from the area. So it could be a very nice location for an initial swing trade. Now, there's no guarantee that they can't do something like this thereafter, right? But at least, in my opinion, you would be guaranteed for a little bit of a bounce trade coming out of this area if we pull back into this area pretty hard. That being said, still looking for the lower high into lower low, right? We have overhead resistance, which is going to be the top end of this range, horizontal resistance 182, and your moving averages right here at about 176, 178 are also kind of acting as resistance right now. So AMD, guys, if you want the bulls to recapture this, the bulls are going to need a heck of a day to smash through all of this area of confluence of resistance, right? So keeping a close eye on AMD on the weekly, still in weekly consolidation mode. The bulls have lost all of this move at this point, right? So if we want to reset the weekly uptrend, it's going to take a lot of time, guys. And keep in mind, earnings, the end of the month of April, I don't think the bulls are going to be able to put in much of a move like this before the earnings at the end of the month. So it could just be that AMD remains trapped in this big previous range that it was trapped in before. We may just get stuck there again. And that's once again between 157 and the high of 182. Now moving on to Amazon. Give me a quick second. All right, so Amazon looking not too bad today, 0.26% to the upside, even though it was a red day, right? Twice now, Amazon has put in red candles after green days. Now, Amazon, no red flags whatsoever, guys. Healthy daily uptrend. We've now put in a considerable amount of space between us and the previous level of resistance, which was your 178. At the current time, we're battling with the all-time highs sitting at about 188. That's to the upside. And now we've created a decent amount of space, even on the weekly here, guys, right? Nice weekly uptrend currently. Any move lower, so if we were to move lower tomorrow, after tomorrow's price action, let's say, still just looking, guys, for a higher low, anything pretty much above 179, going to be looking for a higher low for further trend continuation. Now, if for whatever reason we have a big sell-off and end up in a daily downtrend coming into the next couple of weeks, we'll be looking at that 178 level, which was your previous resistance, to be acting as support, confluence right down here with the 12 EMA. This seems to be like a first good line of defense for the bulls, so we'll tackle that if we do get there. But Amazon still one of your lead bulls in this market, looking very good. As of now, no red flags. Now moving on to Google. Google not looking too bad at all today, 1.28% to the upside, new all-time high on Google, and the Google daily uptrend simply continues at this point. Gorgeous chart, right? So daily uptrend healthy as can be right now. Any move lower, just going to be for a higher low, anything above 151.15, higher low for further trend continuation. No red flags. The bulls are in full control of this daily chart right now. On the weekly as well, was a weekly downtrend. As you can see right here, the bulls have done a great job of engulfing this in one single move. So if ever tomorrow CPI kicks off a negative sell-off event for the rest of the market for a couple of weeks and we see Google just reverse its gains into a daily downtrend, is that big of a deal? No. Look at all this space that Google's created off the lows, right? Anything on the weekly above 132, just going to be looking for a weekly higher low. If we get some weekly sell-offs here in the month of April, going to be looking for the weekly higher low for further trend continuation. Anything below 150, in my opinion, is screaming at a buy opportunity for the rest of the year. Google with earnings the 22nd of April. Now moving on to Meta. Meta pulling back a little bit today, but that's okay. Meta's chart is really gorgeous at this point. No red flags at all. Daily uptrend, very healthy. And as of yesterday's video, we were saying any move lower, just looking for the higher low for further trend continuation. And where were we targeting? Well, exactly where Meta bulls rejected the bears today, right? We were kind of targeting this higher 512 area. It is the previous all-time high area of resistance. Should now be coming into support, and your moving averages are there as well. The bulls played great defense there today. Still going to be looking for a higher low for high continuation, No red flags. Bulls still in control. The red flags only come, guys, if you get too much of an engulfing move and set up for the daily downtrend flush. So far, no indication of that. On the weekly, Meta, super healthy weekly breakout indeed, right? Weekly uptrend clear as day right here. Nice breakout to the upside. Anything pretty much above your lower 480, just going to be for weekly higher lows for further trend continuation as well. So Meta, really not in jeopardy of losing anything just yet. One of your lead bulls with Amazon, right? Now moving on to Microsoft. Microsoft also a little bit of green to the upside here today, 0.4%. Microsoft really has been flat for a better part of the last 3 weeks after breaking out of our big range that we were in right here. We're now above it and healthily above it indeed. So currently it's not looking, it's looking a bit messy here at the top, right? So daily downtrend, yes, the bulls did a great job of engulfing your most recent leg. And now we have set up the space for a potential higher low into potentially higher high trend reversal through the bulls. They will need to do that over the next couple of days because we're coming up on the high last Thursday's trading. Crucial point in time for Microsoft, right? If we break this to the upside, in a healthy fashion, the bulls really get their daily uptrend back, and the weekly will potentially be poised for a new weekly move higher, right? The weekly is looking extremely gorgeous on Microsoft. Did the same thing here. Big move up, consolidation, big move up, consolidation. Now we've broken above. Bull flag, right? Not coming back under our area right here. A bull flag could just be setting up for another leg higher. Maybe even Microsoft remains fairly muted, guys, until their earnings, which is coming up in about 2 weeks' time. So really, I'm not expecting much in the form of a significant breakout unless tomorrow's data is very, very positive and the market just runs with it, right? To the downside, Microsoft, if ever we lose this area right here, not that important. Why? Because we have so much space on the weekly here, guys. Even if we do some extended consolidation, anything above the lower 400 level, just going to be for a weekly higher low, looking for that eventual trend follow through on the weekly. So Microsoft still looking good, not many red flags. Moving on to Netflix now. So Netflix not looking bad either, even though we had a little bit of sell-off today, 1.62%. Netflix did a great job here of putting in an engulfing move towards the highs. And now at this point, guys, what are we looking for on Netflix? Well, we need to protect these lows right here, 603. Need to set the daily higher low and do this trend reversal. We had the daily uptrend back here, but unfortunately, we lost it by cutting these lows here on this move down in this area. So we're going to be looking to protect that daily higher low into daily uptrend. That would put the bulls back in the driver's seat on the daily. If for ever which reason tomorrow's bad and we roll over, set the daily downtrend, is it going to be that big of a deal? Well, not so much, right? Why? Because on the weekly, guys, we have tons of space. Anything above 550, just going to be looking for a weekly higher low for further trend continuation. Netflix with earnings here Thursday, 18th of April. So in my opinion, Netflix's price action going to be very, very muted until the time of earnings. Overhead resistance right now still sitting at your all-time highs. I'd be very surprised if we make a move to those before much of our earnings come out. Now moving on to NVIDIA. NVIDIA coming down on the day today. And NVIDIA, guys, at this point now, well, NVIDIA doing something it has not done in the last 4 months. Can you tell me what it is? They set the daily downtrend, right? So unfortunately, NVIDIA now with the daily downtrend, flushing these lows, losing your crucial area, which was 850, which we saw on the chart. You know, we didn't close below there. We're down there in the after hours right now. We closed above it, but we are still in a daily downtrend right now. That has not been the case on NVIDIA pretty much since all the way back here, right, in the month of November. So it has to be notable to us. We're also below our moving averages now for the past 4 days in a row. That also hasn't happened since all the way back here in January. So a few notable red flags to us on NVIDIA as a whole. Now, is NVIDIA still healthy on the longer term timeframes? Yes, just looking for a weekly higher low. Now in our 3rd week of weekly consolidation, the RSI has cooled off a ton. Momentum is not yet truly negative, although it has been weaker in the past 3 weeks. But all in all, NVIDIA not looking too bad. The next line of defense for your bulls, if we perpetuate this daily downtrend further, let's say tomorrow is a negative news event, well, the next line I'll be looking at, guys, is going to be 800 down to about 750, more specifically 750. If we come back down 750 over the month of April, I do think it's going to represent a tremendous buying opportunity, guys, for the weekly higher low for further trend continuation. NVIDIA only with earnings in the month of May, so there'll be nothing to save them much before then unless they come out with headlines before their earnings, right? So NVIDIA not looking the worst, but not looking definitely as strong as it was back here, right? Still, I'll give it to them. This is really sideways action. It's just leading to beautiful weekly consolidation. So we'll be keeping our eyes peeled. If we truly lose and close below this crucial 850 tomorrow, that'll give the bulls, that'll give the bears a really big head start in continuing this daily downtrend all the way down to our next level, 750, which is going to be my juicy buy zone, guys. Going to be watching out for it hard. Now moving on to Tesla. Tesla not looking too bad either, 2.25% to the upside. Tesla finally recapturing the daily uptrend, right? Higher highs being set. So daily uptrend off the bottom. Tesla with earnings 23rd of April. So now step number 1 is complete. Daily uptrend is in their pocket. That leads us to the next step. Next step is how much of this weekly move are we going to be able to take back, right? Need to get as high as possible to 205. get me as high as possible in relation to 205, then we can talk about the bulls' chance at resetting the weekly uptrend. But as of now, the bounce is not yet adequate enough, only up to about 38%, right? We need to see this come very, very much higher. I would like to see for the bulls to have a semblance of a chance of getting back in weekly control, need to get a bounce as high up as a 189. If we can do that, the bulls will have a chance at resetting this into a weekly uptrend, potentially after earnings if Elon gives us some good news. But prior to that, I do believe the price action will be fairly muted here, guys. Resistance obviously staying put at 183, and then the last line of defense down here at about your 161. Lose that 161, just continue the weekly downtrend, and then we look to our last line of defense right down here, the 152, to really protect the bottom end of this downtrending channel line, your last line of defense on the horizontal support as well. So Tesla, not looking too bad, but definitely not out of the woods yet. It's good to see them do step one. Now, continue this daily uptrend as high as possible into earnings to get some cushion between us and the lower flush zone. That is what I need to see on Tesla. Now, before last, Palantir not looking too bad today, 0.83% to the downside. Palantir just still really stuck in this kind of tightening range at the bottom end of this move. So daily downtrend, no secret there. Kind of looking to put in a higher low and try and reverse this to a daily uptrend. We would need a break of Thursday's high to see that. Break of 24, the bulls would recapture a couple of things, recapture the daily uptrend, get back above this previous horizontal line of now resistance. That would act as support if we're above that, and we'd be getting above our moving averages. So a couple of things that the bulls are fighting for right now. However, if tomorrow's bad and we lose this level right here, well, daily downtrend simply continues, and your weekly move down simply continues as well. It's been weekly consolidation now for 5-6 weeks in a row, and at that point we would be coming down into my sweet spot, guys. This is the buy zone for me, 2150 down to 19. Huge prior support here, prior resistance here, should now be acting as support. I really like this level because it is a monthly higher low attempt by the bulls right now, trying to set the monthly higher low. Come down to this area, going to be a juicy trade to potentially attack the 28 level later on in the year. So that is what I'm looking for on Palantir, whether it's good news tomorrow, need to break that 24, bad news tomorrow, perpetually to the downside here, continuation of the daily downtrend, and we come into the juicy buy area that I'll be looking to do in terms of swing trades. Now, lastly, PayPal with a great day today, 0.99% to the upside. Let's call it 1% for all intents and purposes. And PayPal resetting the daily uptrend. So here's some technical analysis for you. Daily uptrend, loss of the daily uptrend by flushing these lows. Then we look at the size of the bounce, and we were saying the size of the bounce was quite sufficient, got all the way up to 62%, which gives the bulls enough space to set the higher low and reverse this into a daily uptrend. It's exactly how it played out. That's why those Fibonacci levels, guys, are crucial. The Fibonacci is not the end-all be-all. What we're looking for, guys, is the size of the bounce. I want to teach you guys that because when we get a decent-sized bounce like this, the bulls have the probabilities to set the higher low into higher high. If the bounce is too weak, then the probabilities favor the bears for the rollover. That's how we measure these things. So now daily uptrend recaptured by the bulls, and your weekly higher low currently, since we're now in a new daily uptrend, your weekly higher lows are set at the low of last week's trading, right down here at about 63.66. Beautiful weekly uptrend underway. We'll be looking for a break of the prior highs, 68.16. And if we do get those with good data tomorrow, guys, I truly believe that we're gonna grind up higher all the way up to 75 over the next couple of months, especially as we get closer to those rate declines. PayPal looking very good above our big area of support down here, 63 to 60. If we come back down there for any which reason, if data is bad tomorrow, and we come back down there for the next couple of weeks, I'll be looking to make the play on PayPal, 63 down to 61, right where your confluence of the moving averages as well. And the daily looking very beautiful as well, right? The daily, we're above all our moving averages, which is something I could not say for the past 2 years, right? We were always below the 200, this green line right here, 200 daily moving average, and we were always below this higher end of this downtrending channel line. We're now above both of those things, so it is still a technical breakout. PayPal looking very good. As I've said, if for ever which reason we reverse because of negative data, I'll be looking to buy these dips down here, but PayPal looking very good. Congratulations to all of the bulls that were buying PayPal dips with me for a better part of the last 6 months. You guys should now all be sitting pretty. So that's pretty much everything I had for your stock market today. Hope you guys enjoyed today's video. In terms of the swing trades that I'm looking at, very simple, still looking at Mercado Libre. Mercado Libre coming down into my sweet spot zone. Love this company, love the valuation, love their earnings, looking for the monthly pretty much continuation here, monthly higher low for trend continuation. MELI set up beautifully for this week, and even Vici. Vici is one of the REITs that I prefer in the market, and tomorrow, if we get some good data that shows that inflation's coming down and that there's not so much pressure on the interest rate discussion, this is an interest rate sensitive stock. It's down to my sweet spot location. Pretty much $29, $27 is my sweet spot for Vici. So tomorrow I'm waiting for the data, but if tomorrow comes out bullish, I may be looking for a swing trade. The bull's trying to reset this daily uptrend. Going to be trying to make a little swing trade here and hold the position probably if we get a decent enough entry here for the foreseeable future. Looking very good. As of all, that's pretty much the swing trades that I'm looking at tomorrow. After the data comes out, there's obviously a few more that I featured on the channel a lot, such as, Moody's Corporation, right? MCO, if I can get the ticker. So Moody's Corporation, we were looking for that at a swing trade down here. We picked the bottom beautifully. I went with SPGI myself, and SPGI is currently starting the daily trend reversal, guys. Weekly higher lows most likely set. And we're trying to reverse this into a new weekly uptrend. What does that mean? It means your monthly higher lows are set. Look at this gorgeous monthly uptrend. Come down into previous support area right down here. Beautifully tapped it. Now we may be due for another leg up. So SPGI, keep an eye on that, guys, for the rest of the year. This one looks beautiful. And as the other swing trades, guys, just refer to my top 5 options video. There's a lot of plays and bonus plays that I put in there. That was the video that I dropped last Sunday. You have a few more swing trade plays that I'm always looking in there in terms of the put wheel strategy. So that's pretty much it for today's video, guys. Hope you guys enjoyed it. If you did, consider dropping a like on the video. Would really appreciate it for the channel growth. And if you're new to the channel, consider subscribing as well. We're now over 1,000 subscribers, guys. I cannot thank you enough. I'm extremely happy, and I hope to gain many, many more subscribers. And I really love doing these videos, guys, and I appreciate all of your engagement to all of you that take the time to like, subscribe, and comment on the videos. And as usual, if you have any questions whatsoever, guys, if you want me to look at a ticker, now's the time. Throw your tickers down in the comment section because we don't have earnings still for another, about a week or two. So if you want me to look at any names in terms of technicals and brief fundamentals, put them down in the comment section. Or if you have any other trade ideas or whatever you want, guys, just leave it down below in the comments and I'll be happy to answer you in the comments or make a little segment in the video for you. So take care, guys. Have a great day of trading tomorrow. Just keep on the watch for everything we mentioned about CPI, and that should help you through the day. So take care. See you tomorrow after the close. Peace.